Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your metals market update for this Thursday, the 20th of April, 2017, and we're just after 2:10 p.m. Central Daylight Time. All right, as we take a look at the marketplace, let's start here for a moment. The crude oil down 17, gasoline up a little bit, and they're taking down in a fraction here the nat gas. Now I'm going to switch back here. I don't want to be trading the July right now. Must have been a change of months, and I set it on automatic roll for them. So I'm going to roll that back to June. I just noticed it. When we come to the metals, the gold market's slightly lower at this hour. Silver took the beating. Gold didn't close this low. It closed a bit higher than this, about $1 higher. Silver market, I think it was just a fraction lower. You're seeing a good rally in platinum. You're seeing a rally in the copper market, and the palladium really exploded to the upside. Dollar is flat. Now, one of the things you have to remember going in over the weekend is the French election's going to take place. If you see Marine Le Pen win one of the spots in the runoff, the odds of anybody taking a 50% vote and not having a runoff are slim to none. It can happen, but it's slim to none. Therefore, look for the runoff. Now, if it's the far right and far left candidates, watch out, because the gold market, and that's why I bring this up, might respond to that. Miss Le Pen, of course, is talk, lots of it, about leaving the European Union, going back to their own currency. Those are the things you got to worry about. So part of it's there. As you're watching what's going on in the U.S. U.S. stock market, part of this is that Mr. Mnuchin, our Treasury Secretary, who had said just recently, I mean, he's really at odds with Paul Ryan. He made a statement today that they're much closer on tax reform, at least a big leg of it, than Mr. Ryan had said. The market likes what it's hearing. Maybe this is coming alive. What I think might be going on is as the U.S. runs towards its debt ceiling, which is only 8 days away, there's probably horse trading in the background. Is anybody out there listening? Are you hearing from Mr. Schumer talking about the threats against the Republicans shutting down Congress, shutting down the U.S. government? None of that's happening. Am I correct? Therefore, assume that behind the scenes, the reason he's not doing that is because there's some horse trading going on here, and possibly Mnuchin's idea that we're going to get some tax reform could be part of it. I don't know that that's the fact. I'm just giving you ideas because it all impacts the metal markets. As we're taking a look here on the weekly gold chart, you're up near an upper Bollinger Band and you have backed off a bit. The market has not been trending. However, what is very bullish on this chart is that the shorter-term 18-week moving average of closes in red is over the 100-week in the green. The market, when it had the crossover back here, admittedly went up and already made new highs for that move, so it's completed part of that. But this still stays as a massive support zone in the market. We're getting a correction, and when you look at the daily area chart of closes, you've gone from the 1294.10 level, you're at 1282.70 right now. When we take a look at the chart action, you can see the swings in here, and they get much easier when you put on the swing line. The swing line has a pattern of higher lows, higher highs. Now, if the market takes out 1275.40 tomorrow, that will turn the swing line to a pattern of lower highs, lower lows, and might drive the market into the support of the 1267, 1266 range, which is the combination of the 100. Well, actually, that's the 200-day moving average of closes. I don't want to put labels on every one. It'll get you dizzy on here. And the 18-day. The 100 is way under the market. And the 100 is a number that markets and technicians look at all the time. It's the big number. If you think of 200 days, it's almost in business days a year. Got it? Because remember, you lose Saturday and Sunday all the time. So it's a number that they look at, and they look at hard, and you're about to get a convergence on these two where the odds favor that the 18-day is going to get over the 100. The question is, when it does it, are prices above it or under it? And if they're just by it, which way's the move from there? It gets exciting at this point. Bollinger Bands, you were over for a while. You've backed off from them, as you'd expect. But in that process, you've widened them out. So should the market rally up, the resistance, instead of being lower like it was coming down here, is back at 1297. And I'm still going to argue you got 1266 support. If you fell apart, you'd have to go down to 1235 on the lower Bollinger Band. In terms of momentum, you did not embed. Now, I write about this all the time. You typically don't embed in markets. Gold, for whatever reason, over the past 12 months, has had a lot of embedded patterns, but it's giving them up as quickly as it's getting them. I'd rather see it not get them and get a different pattern out of it, and that's pretty much what we're getting today. With this action, you can't even begin the process. You can get to day one tomorrow at the most. So, should you break, I'm still looking at that 1266 zone. The silver gold pattern, you closed at 70.52 last night. You're going to be up near the 7100 level. This number was 70.98. So what technicians will call this is a triple top number on that ratio. Now, does it bust through it and head to the upside, in which case I'll grab this and put it at the bottom, or does it fail up here as a triple top? Can't tell you, but you're at an extreme one way or the other. When we look at the silver, I would have pinpointed support in the lower Bollinger Band if you got down there at 1802. You hit today 1792, you're going to finish out around 1807. The momentum is no longer overbought. It is pointing down, but it's now at least pointing down out of overbought territory. In order to negate the downtrend, what do you have to do on the chart? Well, you probably got to get over 1839 right now. If the market gets under the lower Bollinger Band, it might enter oversold territory. And if it gives ground, it could also say maybe the 100-day average is in play. The bulls don't have anything to hold on to on this chart. The question is, do the bears want to be aggressive at 1830 and then protect their position by not letting it get over 1839? In the copper market, this is just a bounce to the right-hand side of the Bollinger Band in an oversold market. You had your bearish crossover. Now, this is what I was talking about in gold. Do you see how the 18 got under, in this case, the 100? And then when it did so, prices went down and made a new low. So on rallies, you're going to look for resistance into that 18-day average if it gets there. The question is, with the oversold condition, it's hard to get short on the market down here, but I'm still not seeing anything bullish about it. The platinum market, as it turns out, respected that 100-day average. It's kept its trend, is an uptrend. Higher lows, higher highs. The bulls will protect this area, in my opinion, and throw in the towel if you get under 966.30. That's 50 cents away. You are overbought, however. Isn't that amazing? Overbought, we're talking, in one of the metals, while the others are all down. And look at, and I'm going to remove today's action. Here's where you were coming in on the palladium. You had a higher high, a lower low, oversold into the Bollinger Band. If the market rallies out of that, it would be what? I'd be looking for resistance around 796. And you tell me, you're up to $8, but back up to the 18-day average to try to figure out what to do. In addition to that, let's assume you get over 809.50. You still can't get a bull pattern. You've got, no matter how you look at it, a lower low and a higher high. Continue up, you still have that lower and low. One of these really hard markets to call. And it probably has a bit to do with the dollar, which could be a surprise. Is the dollar going to reach down for 99.08, or will this news about the tax potential reform coming at us going to get the dollar over 99.78 and let it get back towards that 18-day average? Right now it's in a downtrend, but very oversold. A little disappointing in the sense that it didn't get down to the Bollinger Band break, but that doesn't mean the trend is over. Until you get over 99.78 and you got to 76 today, the swing line stays down even though the market's oversold. We're going to write about this. And what we do is, you can see, these are the different categories that we have writers on in our company. Yes, the currency markets, energies, financials. You can choose which one you'd like to see, and we want to give you at least a 2-week trial to the Linn & Associates research, so you get to see what our pros talk about. Are you an options trader? They really talk up option strategies and all this. How do you get all that? You call us. You can go to our website. You'll see a carousel of free offers. You can click right up here. If you're watching me on YouTube, the form will appear automatically. Fill everything out. We'll take it the rest of the way. I'm Ira Epstein. Thanks for watching, and I'll see you later today in our financial market wrap-up.